Hello guys, welcome to my YouTube channel. It's your girl Ogi. From the previous video I did, we discussed payroll management, and one of the items I said I was going to discuss in full is Paye. So let's go through it. This is the scope. What is personal income tax? We all know that the major source of revenue for the government is tax, and as individuals or corporate entities, we pay taxes either directly or indirectly. No one is running away from it. So personal income tax is a statutory obligation imposed by the government on the income of individuals, communities, families, trustees, or executors of any settlements in Nigeria. We have two types of personal income tax: the payee, which we'll discuss in the next slide, and direct assessment. This direct assessment applies to self-employed individuals who are either in employment or are running their own small businesses under a business name or partnership, or as a director in an organization. The self-employed individuals will, without notice or demand, file a return of income earned in the preceding year and pay the requisite personal income tax to the relevant tax authority before 31st March of every year. This is it. Pay as you earn. In your pay slip, you see this there and you'll be wondering what it is. It's simply a scheme in which personal income tax are deducted from the salaries or wages of the employee by the employer and remitted to the relevant tax authority. You're working, you're making money, paying your salary. There's a portion of that particular salary that goes to the government, which is your tax. So you're paying tax. Congratulations. The relevant tax authority for personal income tax is the State Inland Revenue Service. For companies, they remit to Federal Inland Revenue Service. Exemptions: personal income tax remitted to Federal Inland Revenue Service applies to staff of Ministry of Foreign Affairs, police/military officers, non-residents, any income in Nigeria. Deadline for remittance: once you deduct the payee from the employee's salary, you're expected to remit it before the 10th day of the next month. And then for annual filing too, you do that at the end of the year. You're meant to file annually to the State Inland Revenue Service before 31st of January. If not, you go pay fine tire. So now the rate applicable is this. It's on the taxable income. What is taxable income? It's just that portion of the employee's income that is subject to tax. They don't tax the whole gross income. There are some deductions that should be made. After deducting, what you have left is the taxable income. Minimum rate: if the annual income is less than 300,000, like what you as an employee earns in a year is less than 300,000, you don't need to go through the stress of getting the taxable income and all of that. On this straight up, you do 1% of this, and that is going to be your tax. For instance, you're earning 290 annually, 1% of it is 2009. So to get for monthly, you divide it by 12, meaning every month you're paying 242 naira to the government. We're going to look at an Excel presentation of it. Although due to technology, this has been made easier. We have an Excel computation table for payee, which makes it very easy for you to get. All you need to do is just to put in the gross income, put the deductions, and automatically it generates the payee for that individual annually and monthly. But I'm going to guide you through on how to get it manually. Sometimes you might just test your knowledge on manual computation. So we're going to look at it. But I have a sheet that can give you a quick answer. You can send a message to my mail and I would forward it to you. I'm going to calculate the payee of an employee using the gross annual income of, let's say, 2,400,000, which means every month this person's gross income is 200,000. The first thing is the consolidated relief allowance, which is higher of 1% of the gross income and 200,000 plus 20% of the gross income. Hope this is clear. So we're going to do it right now. The first thing is 1% of the gross income. And the second thing there is 200,000, whichever is higher, right? So we'll bring out 200,000 because it's higher. Plus 20% of gross income. We have it as 480. The consolidated relief allowance in this case is 480 plus 200. We have that 680,000. The next thing we'll look at are other tax relief, such as the pension. We have the National Housing Fund and others. So this is annual. So I assume annual pension of let's say 300,000, and the National Housing Fund, let's say 150,000. Total deduction, we have it as 1,130,000, meaning this won't be taxed. This is the relief we're getting. To get our taxable income, it will be our gross income less tax relief or total deductions. We have it as 1,120,000. This 1,270,000 of this employee is the taxable income that is subject to tax. So this is the amount which subject to the tax rate. So the first thing, let's bring this down. We have our tax rate plus 300,000 out of this 1,270,000 will be subjected to 7%. So 21,000. When you take this 300 from this 1,270,000, let's know what we have left. So we still have 970,000. This means that the next 300,000, which is at the rate of 11%, can still go and would have some balance left. So this is the balance we have if it is up to 500. So I have 670,000 left. So we'll go again 15%. 500,000, 75,000. This is the balance we have. So we have 170,000 left. We're going to stop here. It will be 19% of this 170,000, no longer 500,000, because what we have as our balance is 170. So we have it as 32,300. So now what it means is the annual tax for this person is, this is the annual tax for this person, like for 12 months. So the monthly tax, this is what this employee will be paying every year, and then for monthly, this is what will be seen on the pay slip as the monthly pay deduction to be remitted to the State Inland Revenue Service. So this is it. So guys, thank you for watching. Make sure you like, comment and subscribe. In the next video, I will drop a guide on how to go about the monthly and annual filing for the pay. Thank you guys. See you in the next video.